Warren Buffett's Berkshire Hathaway disclosed that while they were a net seller of stock during the third quarter this year, one stock they did start buying was Google, around $4 billion worth of the shares. This news, along with the speculation that management at Alphabet is feeding, that they are expected to launch not only a cutting-edge model, but the cutting-edge model, Gemini 3, this week, I believe is causing Alphabet shares to rally today, adding tens of billions of dollars to the market cap, which is causing some investors to wonder if they should piggyback with deep value investor, Warren Buffett. Technically, I don't think it was Warren Buffett buying the shares. I'd be surprised. Maybe it was. It's more likely to be either Ted Weschler or Todd Combs, one of his lieutenants overseeing Berkshire Hathaway's equity portfolio. And so a lot of folks are wondering, should they follow along with what Berkshire Hathaway has done? So in this video, we're going to walk through sort of the highlights, thinking about Alphabet's latest results, thinking about the valuation framework in the years ahead. And this framework, this is actually from Flash. Flash is a free-to-use AI tool leveraging the most cutting-edge models available at any given day. And you can check out any company in the world for free, and it'll provide a framework to think about how a stock might perform in the years ahead. In this case, this usage of Flash, it doesn't always use Google, but this is using what's available from Google, and it's saying, based on Google's models, that Alphabet in the years ahead has roughly 80% upside and maybe 60% downside. Personally, I think this is too conservative when I think about the framework over the next 5 years, and we're going to talk about that in this video. Once again, feel free to check out Flash, see the link below. Looking at Alphabet's results, these are fantastic numbers. You can see revenue actually accelerated year over year. There aren't many $100 billion revenue companies posting accelerating growth. This is just incredible. And meanwhile, they're posting 30% operating margins. This is also similarly a league of their own in terms of that type of profitability, that type of scale, and accelerating. I love to see it. That means a lot of free cash flow for this business and a lot of growing earnings. This is why Alphabet has done so well. Let's dig a little further to understand what's going on beneath the surface level, what's driving these results. So you look at Google Search and their other core Google properties, think Google Maps, revenue growing up about 15%. These are incredible figures. YouTube ads, similarly, growing around 15%. These two are powerhouses in the advertising industry. Google Network, however, this is powering third-party websites, actually shrunk. And I think this fundamentally reflects the changes that's going on with user behavior and AI, which is that now when you start your search, maybe it might be with, ChatGPT, maybe it's with Gemini, you're asking a question and now AI might just say, here's your answer, as opposed to saying, here are different sites you might want to check out for your answer. It's a big difference. And that impact of you not going to that third-party site means less advertising revenue for those sites. And that's why I believe you're seeing this contraction. So they're either a structural issue going on or they're fundamentally losing market share. I'd argue their core properties are gaining market share. So this is a key aspect to think about with this business. When you think about subscriptions, like, for example, a paid YouTube subscription, their devices like Android, Pixel, this is also doing quite well, around 21%. So combined Google services, when you think about all these different things, up around 14%. Very, very solid. Google Cloud posting accelerating figures, up 34%, showing improving profitability. This is also suggesting, hey, maybe there's some sort of advantage where you can leverage Google's cutting-edge models, but in order to do so, you're going to want to leverage their cloud infrastructure. So it sort of goes hand in hand driving that growth. Something to think about in terms of their potential. And then another key aspect is not only are you posting this fantastic growth, you can see revenue growing around 16%, but the cost in terms of acquisition cost of people to actually look at the ads or the number of employees, a fundamental operating cost to run your business, this is showing that, hey, we only needed to grow our employees by 5%. I suspect if they wanted to go, for a couple of quarters, maybe we don't want to grow our employees at all. I don't necessarily think that would be an advantage for them. But if they wanted to, they could really show this is a 40% plus operating margin business if they wanted to. I'm not sure they will, but it is important to think about that when you're considering, Alphabet. And this is just an amazing business. when you're looking at these results. But maybe all this doesn't matter. Maybe what really matters is that they are investing for the future, thinking about how do we get to superintelligence. And they're launching Gemini 3 supposedly this week. Supposedly this is another big breakthrough in terms of AI capabilities. But this is the race. And you have Larry Page, one of the co-founders of Google, saying, reportedly in several different instances, saying, I'm willing to go bankrupt rather than lose this race. Talk about the race to AGI and artificial, general and then super intelligence, saying this is an all-in bet. And you're starting to see it with the numbers. You're seeing massive amounts of either debt being raised. Just earlier this month, they announced raising over $20 billion of debt. And they also announced expected projects in the tens of billions of dollars. So it's kind of an interesting signal when you see a company like Google that's posting 30% margins, incredible growth, $100 billion revenue in a quarter, growing so quickly, incredible, profitability, then raise money. What's going on here? I think that's a testament to how big of a challenge, how big of a project this is. And they're saying to themselves, we don't know for sure if the return on, investment is going to prove itself. I think it will, but they're making this bet saying, you have Sam Altman talking about $1 trillion, sort of commitments for OpenAI over the next, let's say 5 to 10 years. So Google's saying not only do we have our $100 billion, let's say, in cash flow per year, but we're going to be tapping the capital markets as well. We're going to be borrowing money. We're all in on this. That is the signal that you're seeing from, Alphabet or Google here as well. And so then looking at all the different pieces, what's it worth? What's it worth today as we think about it? Because there's so much that's going on with Google. I mean, I've just sort of showed you how they break it out available for shareholders, but I think there's another layer that's important to reflect on, as you think about the valuation. First of all, none of this is financial advice. I'm just sharing my personal thoughts on Alphabet. Also, recently, San C, a premium subscriber, wrote, I initially signed up for the light subscription to test the waters. Since then, your analysis and insights have provided so much amazing value. I've regretted not going all in from the beginning. He's talking about unrivaled investing. If you're looking for compelling ideas, come check it out. So when I think about Berkshire buying Alphabet shares, an equally important takeaway for me personally is that I'm very glad to see this. Not necessarily because I'm saying Alphabet is deep value, but I used to go to the Berkshire Hathaway shareholder meetings with my dad, years ago. And I have been calling out for years now that I think Berkshire would have been better off making small bets on Amazon, Google. This was before they did their giant Apple bet. Like when they did IBM, I was like, why would do that versus Google? It didn't make any sense to me. So seeing that the next generation team is willing to make this bet is very important as I think about the potential for the potential for Berkshire in the years ahead, because this means this isn't just a Dairy Queen company. This isn't just a legacy energy company or railway company. This is a company that has the capital. They have hundreds of billions of cash that they can then redeploy in Google. They could go out and buy hundreds of billions of Google in the next year if they wanted to. And so that, in my opinion, fundamentally changes the trajectory of how Berkshire can perform in the years ahead. So for investors that want to think about, maybe I want something that has the protections of a Fort Knox type of balance sheet like Berkshire Hathaway and just these incredible operations, just world's best reinsurance operations, that sort of thing. And maybe a bet on these forward-thinking companies like Alphabet. So I find that this announcement is actually much bigger than the $4 billion because, in my opinion, it reflects the next generation of Berkshire and Berkshire's managers could lean into this type of growth and incredible companies. It's not just these legacy bets from Warren Buffett. So I'm personally excited to see that, and I do look forward to revisiting Berkshire, to see, hey, do I want to, scale this up, or do I want to buy this, for myself personally? And so I call that out partly because what was Buffett also buying this quarter? If you go back to the very beginning of the video, one of the positions he was buying was Chubb. That's an insurance company. One of my largest holdings is an insurance company. So insurance companies can do great in this environment where, let's say, interest rates are unlikely to go back to zero. And if interest rates spike up, let's say because if corporate bonds spike up, it could be an opportunity for some insurers. So I look at this and I find this to be very interesting for Berkshire. Now, thinking about Google or Alphabet's valuation, let's focus first on their Google services, their ad business, plus, the Android and, their Pixel, their hardwares. And so they're growing, this business growing low teens this year, on a year-to-date basis. So I'm sort of plugging that in. And then assuming optimized margin somewhere around 40%, sort of giving them the full benefit of the doubt. And then thinking about where do they grow in the years ahead. I'd argue my high case here doesn't give them full credit to, hey, what if there is truly an AI revolution and you can start getting significantly faster revenue growth? Because partly this is still really a revenue, a business where the majority of their revenue is advertising. And so if you have some sort of cyclical impact, and we are seeing signs of a struggling consumer, if you have that sort of play out, even if you have a really cool AI product that's taking off and changing industries, changing how you research medicine, let's say, but you have a core advertising business that's also shrinking or fundamentally changing, and that's been my hesitance with Alphabet up until this point. So I think this is the one that's the wild card. I'm providing a 15 to 25 times earnings range, multiple range in the years ahead. And this is saying just their Google services, excluding everything else. You're saying maybe there's 40% upside, maybe there's 40% downside. But, this alone, I would say, is just a hyper conservative perspective because it's only looking at Google services. You need to consider everything else, like their cloud. Cloud, I'd argue, is worth somewhere between $500 billion and $1.7 trillion. And then you could, look, the market cap's already $3.5 trillion when you're looking at this. So these are incredible scale in terms of where it is. But you got to think about all these different pieces. Google services, somewhere between $2 trillion and $5 trillion. Thinking about cloud, you need to layer that on. You need to think about other bets. Unclear how that ultimately shakes out, where Waymo shakes out, where some of these AI bets play out. Potentially changing medicine. We'll see. Then you have their cash. I think they're a large shareholder in SpaceX. That's also throwing into equity. So overall, I think the initial AI report that I showed at the beginning, which once again was powered by Google, interestingly enough, not always. Flash will use whatever model I think it's best at any given point. But looking at this, it's, in my opinion, this is a hypothetical framework. Stock price go higher, can go lower, depends on how management executes, depend on, sentiment. But looking at these pieces, I understand why Buffett or Berkshire Hathaway was buying stock in Google. It does have that sort of symmetry that I think is favorable, where if you have continued favorable execution, if you have some multiple expansion, you're possibly compounding at close to 20% over the next 5 years. Whereas in the lower case, assuming multiple contraction, you're not really getting significant growth in their core Google segment, partly because maybe AI is growing, but advertising takes a hit. We're not seeing that yet. But if you were to sort of roll that out, then maybe you're closer to break even over the next 5 years. So that, one perspective, it works out, the other closer to break even. Personally, I would rather not chase, and I'd personally rather consider a scenario where the low is closer to 20, 30, 40% minimum upside. So that is a bit of a haircut from where it currently trades. But maybe that's where Berkshire was buying it, because the stock has rallied significantly. I hope this video walking through how to think about the different pieces. You have core Google services, that includes their advertising, includes YouTube, and that nets in, their subscriptions, their hardware, and then you have their Google Cloud, which is their infrastructure play, which is growing at a fantastic clip. Thinking about these two different pieces, and then you have all these other bets, that they're making, like Waymo can be a game changer in the years ahead. So thinking about, layering on. Other bets I put in somewhere between $200 and $400 billion in value. If you think it's more, think about that in terms of that framework I was just showing you. I hope this video, thinking about Alphabet, has been helpful. Think about not only Alphabet, but also Berkshire Hathaway. Thanks so much for watching Unrivaled Investing.